All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the 9th of 2024. We just spent 20 minutes working on audio. I am not a fan of GoToWebinar right now, and we'll give them a call and figure out what's going on. But one more check. If you can hear me, please just type something in and let me know. Bill, I might dismiss you here as an organizer, which will nope, I'm just going to leave it the way things are. Let's have Bill Brander type something in so I know that you're there, can hear me, or Bill text me. All right, but here we go. If I was to ask you guys, so who can remember the estimates for last year? Anyone know where we thought the market would be, where someone thought the market would be? This is in regards to a question asked by me in regards to where we're going to go in 2025. So, and if you don't know, just type a question mark in. That way I'm a little worried about my audio today, so just trying to make sure that people are understanding and I'm on the thing. Okay, so a bunch of question marks. Well, it's interesting because some people have asked me, Kevin, what is so important on the estimate? So let me put it this way. Why are those estimates so important? Does anyone know that? Why are those estimates so important? Another couple question marks coming in. There we go. Mary, because the big guys base their models on these estimates. So it's funny because a lot of people say, hey, it's a guide, we're expecting this, we're expecting that. All the big guys base their models when they're getting in and out on these estimates. Look at last year's estimates. The projected high was a 13% return. The estimated projected low is a negative 12%. And estimates kept changing. It happened over and over and over again. And these estimates kept changing because they had to change their model. Does anyone understand how some of these models work? It's shocking because when they hit year-end estimates, lots of people are churned in their funds and go to treasuries or fixed income. I'll be honest with you guys, I'd love to put all you guys into treasuries and fixed incomes. Any fixed income, I'll make somewhere between a 3.5% to 5% on, plus a management fee. It's truly just not fair. It's just not fair at all. But someone brought to my attention, they said, hey, Kevin, what about this Oppenheimer guy? Love that picture. I'm going to use that, by the way. But here we go. New estimate, Oppenheimer, and kind of a nobody in Oppenheimer said, we're going to hit 7,100 on the S&P 500. Very interesting because that's a 16.7% increase from the last close of 60.90 when he did this. Let's see where we close today. Today we closed down, obviously, but we closed down U.S. We closed at 60.52. So we closed at 60.52. I'm going to work some numbers. So we closed today at 60.52. 60.52 minus 7,100 equals 1,048 points away, or take the 1,041, divide it by 60.52, and we need a 17.32 2% return. So, if I was to ask you guys, is that possible? If you think it's possible, tell me why. If you don't think it's possible, tell me why. But is it possible? And of course you're going to say, well, everything's possible, right? Which is true to a certain point. But if it's possible, tell me why. If it's not possible, tell me why. So, okay, possible because of pro-America. I'll agree with that one. Less regulations. Mary, I'll agree with that one. Oh, there's a good one. AI, artificial intelligence tonight. I like that answer. That's a great answer. I like that one too. Not possible. And I see tariffs. Any other comments or answers? I'll tell you, we just did something that only happened 4 times now since the start of the stock market. Anyone know what that is? Back-to-back 20% plus returns. And I've got a really interesting article listed right here. History, it's only happened 4 times before. Twice it was 4 times in the past 100 years, the index logged 20% plus returns, according to the research. Twice it happened, it was forever ago, right? But the thought process is, the problem is, for whatever reason, we, for lack of a better term, for whatever reason, it's not expected to be a third year. The third year is not supposed to be a great year. All right. So the short answer is, and what I'm trying to tell you guys with all this garbage I'm throwing your way right now, projections, they're truly not important. Everyone blew it last year. A lot of people won't make the S&P 500 or beat it because their algorithms, their models push people into more fixed income when we still had growth. And that happens. That's what, in real life, that's just what happens at times. And it's the reason that we don't do that. We don't play the game. We try to find undervalued stocks. Let's face it, we use the Warren Buffett method of investing. We try to find those undervalued stocks that have huge upside opportunity. We don't put you into a mutual fund or algorithm trading. It never truly works. So for those who are worried about the estimates, we've never had 3 back-to-back years of 20% plus growth until we do. And it very easily could happen next year. Possible because of pro-America, less regulations, AI. I could put a couple more in here. Tax relief again, where he continues to give those tax cuts moving forward. Fixes problems with the 3 wars going on. I don't know if anyone caught that North Korea is no longer helping Russia out with their war on Ukraine, and that Trump on Saturday talked to Zelensky and made a call out to Putin. I don't know how he's going to solve the Israeli-Palestine Middle East issue. If China wants to take, I keep wanting to say Singapore, but it's not Singapore. If China wants to take, not Malaysia, I'm brain farting right here. If China wants to take Taiwan, thank you. If China wants to take Taiwan, they have every right. They own that already. They're not taking something. They're just redistricting and regovernmenting something they already own. But it would be pretty neat. You might go through history where we'll see 3 back-to-back-to-back 20-year plus gains. That would be absolutely amazing. Do I think it's going to happen? Interesting question, David. I don't know. If you were to ask me or put me on the spot, my expectation, and I'll go ahead and I'll put it in writing, expectation would be a single-digit growth year, and I'm probably somewhere in that 5 to 9% range. That would be my expectation. Now, I'm also going to say I do think there are a bunch, and I'll go so far as to say 25, with 25% plus growth going into next year. And I'm going to go over that with you guys. A lot of what I'm going to be spending time on next year is going through my spreadsheet. And I'm going to kind of go up to the top. I've already done some of this. Apple's PE is a 37, Ford PE is a 25. I would give Apple a PE of 42 because they're doing so well. If you multiply the PE used times the EPS used, Apple has a chance to get up to 347.76. I like Baidu's. Huge opportunity there. Oh, Disney. Correct, Mary. Let me go to Disney. I put Disney up there to top. Current P of 39.39, forward P of 19.87. If you look at Netflix, not looking at Paramount Group or looking at Discovery, but if you look at Netflix and you follow through Comcast, they have bigger PEs. If we just give Disney a 40 PE and earnings next year of 517, it has a target price of $206.80. That is a realistic target price on a company that's having some issues. So if you were to ask me, yes, I don't have a whole lot. Hey, we got Jim Kohler in. Thank goodness, Jim. Good to have you with us. If you were to ask me, I don't think the S&P as a whole will grow. Expectation, I should put for the S&P 500 for 2025 would be a single-digit growth, but there are some good stocks with 25% plus growth going into next year. Mary, yes. If you look at Google, I already showed you Apple. Google puts you up at $249.29. I think I used Bank of America. Where's Bank of America? No, I didn't. Didn't have to do Bank of America. Oh, I don't have all of these done. Some are on track, some are not. Let me see. Yeah, so I did some of them. Okay, so some of the ones that we have, Apple. Let me run down to Verizon. If you take a peek and look at Verizon down here, a 17 and an 8.7. If you just take Verizon and you go into the middle and give it an 11 on the forward price to earnings, that gives you a target price of 52.25. There's your growth on that one. Square, I really like Square. 55.22. We're going to split the difference and give it a 40. On the EPS for next year, $4.45. That gives you a price target of 178. So the short answer is yes, I like where we have some of those opportunities, and I think we've got a bunch coming up, a bunch of opportunities that are interesting. Micron, I knew you were going to ask me on that one. Let me see if I've got Micron's information in here. If I put Micron in here, Micron, this is an interesting one. It's at 148.23, not sustainable. A forward is 7.79. Realistically, I would end up giving Micron it's in the chips area. So if you're in a chip area, you're between a 15 and an 18 for a typical PE. Earnings per share this year were 67 cents. Earnings per share next year are at $12.83. I would probably split the difference with that one as well. So, 13, give it a 7. And if we go ahead and we take the forward PE times the 7, only at $105. Only at $105, so that would give you an idea that, hey, that's what we're looking at. One more time, I'm going to do a sound check. Everyone can still hear me? Yes, and so I will go ahead and do that one. So very interesting. Yes, if we go back to Micron, if we go a target on the low end, we'll take the lowest earnings per share times the lowest. Yes, it could be $5.02. A realistic high end, which we're not going to use 146, we'll take 15 times $12.83. 192 is realistic. Where do I think Micron's going to be? Probably closer to the middle. It seems better for Micron. If I was going to be in here, I might actually give it something like a 20. No, probably a 25. Because I think that target price is going to be right around 160 to 175. So that's where I would be. Thank you for letting me know you guys can still hear me. Greatly appreciate it. So that's where I'm looking at for certain stocks. I'm going to go through hundreds of stocks doing this. So Mary, that's more for here in about 3 weeks. I'll go over that. Okay. Boy, I'm taking so much time up today. Big picture. Very interesting. Big picture talks about the Federal Open Market Committee and how many cuts we're going to get. It talks about who's taking those positions. Very interesting read, but what it all means, the newcomers for the FOMC are largely aligned their thinking, and they seem to believe more easing is needed. Plain and simple, I would expect we'll get another 1 basis point rate cut into next year. So that's what we're looking for, and that's what where our expectation would be. We will probably take a break in January, and he will admit as much. We'll find out next Wednesday on the 18th. I would also expect that the rate cuts won't be as important as the economy staying in good shape. If our economy starts to falter and we do hit a recession, boy, I'm just going to say the crap's going to hit the fan. But that is definitely something we need to pay attention to. Okay, Dow Jones Industrial Average. Where our market's going to head this week, I'm going to say higher, even though we just had a pretty good down day. We've had 3 in a row, it looks like. I would expect what we're seeing right now is the churning, the selling, the tax harvesting. When you have that, usually in December, we might have that for a couple more days, and then boom, we're going to get some buying. So I'm not too worried about this week yet. Baidu saved us while Micron and Nvidia kind of were pretty bad. Micron and Disney, I think, reached down 2%, and Nvidia was down 3.5%, almost 4%. Otherwise, we were up in most other areas, so it was strategic balancing is what I saw today. The S&P 500 on technically its second day out of 3 that it's down, just giving it a little bit of room to go higher into the end of the year. NASDAQ, same exact thing, looks just like the S&P. So technically speaking, the drops that we've had are doing nothing than building a base in all reality for most likely a bounce higher. If you were to ask me where I feel we're going to end the S&P, I would say up 2%. Earnings are pretty tame, but we have Oracle today, which was pretty interesting because Amazon is going to offer the Intuit, QuickBooks for all of its small businesses, and Oracle is going to be a huge player on the government. If you see Elon Musk talking about how outdated the government software is, Oracle will be the most likely candidate to jump in for their software protection and so forth. It's just Oracle would be number one in the running to really have that take off. AutoZone on Tuesday, Adobe on Wednesday, Costco on Thursday. Those will be the big ones. This week, CPIs and PPIs, if they are coming in line, we basically know we get a rate cut in December on the 18th. If they come in extremely hot, then we have a problem. But looking at them right now, nothing says that we have an issue coming up. 0.2, 0.3, 0.2, 0.2 for personal. Core CPI would be the most important, and it's not letting me, for crying out loud. So, short answer, not too worried about the CPI numbers. I do have an article that talks about it being an issue. I've got a ton of news this past week. Interesting to see where Musk and Ramaswamy will cut spending in the government. I just like a couple points. Musk and Ramaswamy are seeking major cuts to federal spending. Any meaningful reductions will be near impossible without legislation to cut Social Security benefits, which I don't think anyone will do. And how do I say this? They have some areas that they can make some cuts in that will seem like big numbers, but they probably won't be. So that's something to remember. If you hear $100 billion, but the federal government spend of $6.1 trillion, I mean, yes, it is $100 billion, but whether it will be that important or not, I really don't know. That'll be interesting to see where those two go to town. A really good article, I'd suggest you read that one. I just had an interesting article that came out on Bank of America. Bank of America is bullish on stocks. The Trump agenda is going to be beneficial for some deregulation on the banks. The regulator regime increased DMA and merger and acquisitions, lower taxes, pick up in the domestic capex. It's a good opportunity for banks to move higher. It's interesting though, there are some laws now in place that will keep us from another. There are laws in place that will keep the banks from not allowing another financial reset if they follow those laws. If I look at the ones that were mentioned here, Wells Fargo, JP Morgan, Goldman Sachs, Morgan Stanley, First Horizon, SNB, which is Webster Financial, Western Alliance, the East West Bank Corp, Zions Bank would fall in here. Yes, there are laws in place that will protect us and allow banks to still make significant money. Wells Fargo is the worst. They've been caught making a number of mistakes. I'll be honest with you, I don't know why anyone would bank with Wells Fargo right now. But it is pretty big, and again, as long as we get some minor revisions, our financial system is in place, run on banks is protected, we're going to be more than okay where we can let banks start to ramp up again. It's just a matter of banks won't pull some of the crap that Wells Fargo's pulled in the last year. Well, let's just say the last 4 years. Interesting article on NVIDIA Microsoft, why top investments decided to dump shares. I don't agree with where they're at. I don't think the AI has stopped. I don't think the Mag 7 have stopped. But I'm showing you both sides of the coin. An interesting article on why they dumped a lot of shares, yet they still have shares. The best explanation is that, hey, they're taking some profits. A misleading article title. All right. What Trump's mass deportation plan means for immigrant workers in the economy. Again, really down on this. And I had an interesting article. In fact, I'm going to stop recording right here for a quick second. All righty. Very interesting article for you guys to read through. Meta platform. Stock rises. U.S. Supreme Court says it's going to uphold the ruling on a TikTok sale. Meaning, maybe not. It'll be interesting to see where TikTok's going to be. I don't think TikTok is going to be banned in the U.S. If it is, you could see a $100 run on Meta. That's the short answer. Meta is saying 662. That would be really nice for 12-month forecast. Investors will be back in Magnificent 7 stocks, including Amazon and Microsoft. Very interesting article letting you know that the Mag 7 is not dead. Definitely go through and read that article. And there are 3 stocks that have the bullish golden cross forming. One is Disney, one is Chevron. I truly don't know CDNX, but I would not plan on Chevron following through with its golden cross. Just because when the pipes open, we're going to pump like there's no tomorrow. All right. What questions do you guys have that I can answer for you? I'm sorry about the audio today. That was awful. Yes, I saw the article on NVIDIA. The Chinese government's going after NVIDIA for anti-monopoly practices and monopolistic practices. I would not plan on that really going anywhere. If they cause that problem, NVIDIA is just not going to sell to them, and they have some of the biggest orders for the chips. So the drop you saw today on NVIDIA, I would tell you that drop is a buying opportunity. And let's see, where NVIDIA dropped today? No, it was down almost 4%. NVIDIA dropped $3.63, down 2.5%. It definitely came back from the end of the day. And after hours, it's down another 88 cents. So it will be interesting. Today for NVIDIA, it closed at 138.81. The lows today were 137.17. So not worried about it yet, but if we feel we need to, we'll be adding protection on soon. And yes, that's an interesting idea. If we take a look at a chart on NVIDIA, it's actually just technically going bearish. It held the 50-day. If we see it break the 50-day tomorrow, after the first hour, we'll be adding protection back on, most likely at the 135-ish level, maybe a 137.5 if they have it. So that's where we'd be looking to work on NVIDIA. Good question. All right, are there any other questions I can answer for you guys? Sorry about the audio, not really sure what happened there, but I will figure it out. All right, guys, hey, have a wonderful evening. And I don't see any other questions coming in. So, guys, hey, have a wonderful night. But appreciate you guys being here. Have a great evening. Bye-bye.